Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Dennis Dick. As I mentioned yesterday, Joel is out. Today, Dennis and I are with you. We'll be joined by Mark Chaikin later today at 8:15. He'll give us his thoughts on the market, his bullish and bearish takes. In the meantime, we have a lot to discuss. We have a lot of earnings. We have a couple of ratings. We have a Fed meeting today. Don't forget about that. 2 o'clock Eastern time. Unlikely they're going to raise rates, but hey, you never know. So we'll keep an eye on that throughout the morning and see if the market is reacting to that in any way, shape, or form ahead of the Fed announcement later today. We're going to talk about some stocks that went ex-dividend. We're going to talk about pod stocks having a huge move yesterday, giving some of them back today, or some of those gains back today already, with a Cowen note saying that they predict the new AG won't be in for long. So we'll talk about that as well. And as always, we'll take your questions from our chats on YouTube and premarket.benzinga.com. Dennis, how's it going this morning?
Just looking at a little bit of a pullback here. Nothing crazy. I mean, with the significance of yesterday's rally, this little pullback looks like a blip here, but a little bit of profit taking this one.
You know, we were talking about this on the pre-market show. Is just sort of like, okay. So yesterday had a rally. We're through that 50% retracement, and a lot of people, you and me, and I'm sure many others, feel like, crap,
Yep.
kind of missed it.
Yeah, I mean, it's been 6 days or so. If you go back 1, 2, 3, 4, 5, just count the days, 6, 7, 8, 9 trading days ago is when it looked like, this is getting serious here, and the market went all the way down on the spot at 259. And here we are in less than 10 trading days, getting 2/3 of the losses back. So it's been an incredible run. I said yesterday I wouldn't be chasing this rally. That was when we were 277. Well, I ran another 30 S&P points. So I guess I was wrong. I guess I should have been chasing it yesterday morning. I'm still not chasing it here, but holy cow. I mean, on pullbacks here, I think there's going to be a lot of people saying, I think this was the opportunity there and I missed it. So I'm going to be buying pullbacks. And I think you're going to see that in a lot of stocks. So I've been a seller of rips for the last month. But you know what? I think I'm going to be a buyer of dips as well. So if you get a significant pullback here, I think there's going to be money managers looking to load up and try to get long for the end of the year, because we know November, December can be very strong here. So the bulls look like they're back in control, at least for now.
That's true. We do have the end of the year coming up, window dressing. You want your
they just run up at the end of the year. They just typically run up. So you just want to be aware, December is usually a good month for stocks. I mean, it's not out of the realm of possibility that we can make new all-time highs by the end of the year. I mean, we've come this far back, which is crazy. But again, I'm not buying, stocks when they're up 200 Dow points, and I know it would have worked yesterday because we went up another 300. But I mean, I think you are going to get another chance on a pullback here. I think that's maybe when you strike.
All right. Wow. Buying dips all of a sudden.
Buying dips again, yeah. And you know what? I'm my invest portfolio, I raised a lot of cash around this 280 SPY. That was if we go back, and it was a good move going back to October 17th. The bad move is I never really put that cash back to work.
Yeah.
So now we're right back to where I was raising cash before, and the market looks a lot more healthy now. So that's why you got a lot of money managers maybe that did the same thing I did, and you really didn't get, if you were not buying when the carnage was out there, they never really, it wasn't like it gave you a double bottom or anything like that. It kind of bounced, and then it bounced hard in the next day, really. And we've been just slowly grinding our way higher since, until yesterday when we had the full breakout through the 50%. So that's why I think there's a lot of people, I don't know if we got people caught short so much. I think there's just a lot of people maybe disappointed that they didn't buy more stocks on the original dip 9 days ago. And I'm one of them.
I'm 2 of them. All right.
I'm 2 of them. Yeah. So let's move to the earnings reports here. The big one reporting last night was Square, widely traded. It is trading down on its report, SQ. Give us the numbers, Spence. Let's break down the action.
Yeah, a lot of numbers here. So the Q3 EPS, 4 cents. I don't think that compares to the 11-cent estimate. If it does, it's obviously a miss. Sales of $882 million versus a $413 million estimate. So they doubled essentially the estimate on their Q3 sales. Or that was not adjusted. Adjusted is 431. So adjusted still beat 431 to $413 million. The Q4 EPS guidance was raised, coming in to 12 to 13 cents, and then the sales guidance coming in a little in line on the guidance, and in line or beats on the earnings. So all in all, a not terrible report.
Not terrible. It is a stock that has been loved for a long time. It's a stock that's come back. It's a stock the portfolio managers might want to look at buying on the dip, and you're getting a dip here in it this morning. So I don't think I'm coming in here and shorting it. That being said, these earnings moves are vicious. Sometimes you get the gap and go up. Sometimes you can get the gap and go down here too. So I think though you get near 76, 77. There's we've traded in that price for the last few 3-4 days ago for a couple of days. I think there's portfolio managers who are interested in putting square in longer term portfolio, and I think you're going to see people buying the dip here today too. I don't know if it gets it all back, but I think when if the market holds up or starts to move higher again, I think it takes square along with it. So it's one I'd be interested in buying.
This has been like a pure Momo, the purest of Momo plays.
It has.
So,
and you're getting a pure dip here, and it's not really so. They didn't blow it away or anything like that, but it's just a stock that's loved. Momo has been back in favor. I know we're down a little bit today, but higher beta names. The Twilio moves absolutely incredible yesterday. I think they're going to be looking at stocks like this on the dip.
Well, since you mentioned Twilio, let's just bring up a chart and look at that one, because
it was unbelievable. And full disclosure, I'm actually long a little bit of Twilio here overnight because I was looking for follow through. Don't know if we're going to get that or not. We're obviously down here a little bit, but it's just such a huge move, such a breakout. I mean, you got everybody caught in and I didn't make any short trades on it, but I made some bets there with Nick Shaheen on the show, and he obviously won that bet because this thing just blasted off. I did not see the gap and go being that vicious. It went 81, and Nick called this. He says if it goes 81, it's going to go 88. Well, it didn't just go 88. It went 96 yesterday. Just an incredible move here. Anybody who's short this thing there's been no pullback. So you're crushed if you were short it. I don't know what the short interest in is it, but I think any pullbacks is going to have people trying to buy it. So path of least resistance, believe it or not, for Twilio is probably still higher.
Let's see. According to shortsqueeze.com, short percent of float is 7%. So not.
Yeah, so it's a little bit. It's not huge. It's not a major factor in the movement here, but that was just such a rip your face off rally there. And the gap and go, I thought it might stall out at 87 or 88 when you saw it getting up near the old highs there. It didn't even slow down there. It just kept blowing through everything there. So incredible move, incredible in this market, and this tape to stock to be making a new all-time high. So when they go to 96, you often think they're going to go to triple digits. That's what I think is going to happen with Twilio here eventually.
Yeah. Any other notable just movers from yesterday that you saw besides Twilio that kind of caught you?
I mean, every tech stock was just blind. Yeah, and it wasn't even just tech stocks. It was like every stock. So it was like a buy everything rally. Look at the drugs. I mean, Pfizer and Merck. Merck took off, broke out, made new 52-week highs again there yesterday. Pfizer, took off and broke out through the 44. I own both of these in my long-term investment portfolio, but these typically are more defensive stocks that, when it's full risk on, sometimes these stocks don't participate. Not yesterday. They were in full participation mode. Even Coke and Procter, Coke was trading up yesterday. Johnson & Johnson traded up yesterday. So we're even seeing, utility stocks were trading up yesterday. So these are typically defensive, but they were buying them too. It was literally buy everything. You were struggling to find anything that was weak yesterday. I didn't look at gold. Maybe it was weak. Yeah, it didn't really participate. But I mean, usually when you see the market up that much, utility stocks are not going to be participating as strongly as they did. And they were strong too. Some of the food stocks, they kind of struggled a little bit, but holy cow. I mean, it was a buy everything rally yesterday.
So when you get a rally, a risk on and a risk off rally like that, what is that?
Buy everything day. We haven't seen one of those in a while.
So what does that tell you just for today?
It just tells me the bulls are in control. So when you see, this pullback here, I don't think there's no way we're going to give back like 200-300 points here today. I mean, this market is crazy. It's been very hard to call day to day, and usually I'm pretty good at calling the market, and I've struggled here for the last week trying to call this thing because it's been pretty wild. And headlines can drive us. I mean, we get one headline from Trump on China and says no deal, we could be down 500 points. So you can't predict what's going to happen with headline risk, and there is headline risk to this market, but there's just the buying pressure yesterday usually doesn't subside just in one day. So I think, on the pullback here today, I think there's probably going to be buyers here too. Would not be surprised if we end up green again, barring any, crazy stuff from the Fed. The Fed's the wild card because we're going to go to that and talk about that in a second, but we got a 2 o'clock meeting here. So, let's see what happens. Maybe they're going to be a little jittery ahead of that. But I mean, unless they go full on real hawkish here again in their tone, that's good. Well, that's going to be the wild card.
Yeah, as usual, it's just because they're not expected to raise rates. It's going to be about the tone of the Fed, which I hate reading into, but yeah, that's what it's going to be. It's going to be,
and the sentiment, and media will find something to justify the market moves always. Yeah. So if we get if they want to rally it, they're going to rally it, regardless of what the Fed probably says sometimes. So, and the media will grasp at whatever they can to justify the rally. I mean, this is just how it works. Sometimes stocks just move technically, and the media doesn't want, and I talked to a lot of Reuters reporters, and I've been quoted lots of times, Wall Street Journal, different places, and they always want a fundamental reason. They want to hear, we had a technical breakout and we're going because of the charts. They want to hear that there was a fundamental reason behind it. And they will find whatever reason they can find to write that down, because nobody wants to, just hear, oh, we're going up because, charts are looking good and we're in breakout mode here. They don't want to hear that. They want to hear, oh, there was a headline, there was something. So because, the masses, and the most majority of people who are reading media aren't looking at charts, and they don't want to hear about a chart. They want to hear about a fundamental reason. Yeah. So, but a lot of times I'll tell you, the fundamental reasons are kind of dug for, and sometimes those aren't even the reason we're moving.
Sentiment, not always.
Not saying fake news. Not saying fake news, but they dig for headlines.
Sentiment is not a satisfying answer as to why something is up or down.
No. And right now, the bulls are in control, man. I mean, this has been a wicked. Put this in perspective here. We just rallied 200 S&P points in what? A week and a half? That's incredible. That's incredible. After we were in the gutter. I mean, this is the full, and we're going to get Mark Chaikin here in a minute. This is the full V bottom. I know Mark was on our show calling V bottom. He was a little bit early on the call, but you know what? He's looking now. This is a V. The V was just a little bit later. We looked at the original V and it came back down, but now we got the V. So you know what? Mark looks like he might end up being right here.
Yeah, he was saying V, you were saying W, and he was looking like...
And we came down and we didn't do the W either because we took out the lows. We made a new V.
Yeah. All right. So, it is 8:14, so I'm going to take a quick break, and we're going to grab Mark Chaikin in a second. He is the founder of Chaikin Analytics, so we'll be right back with Mark. Welcome back, everyone. We are now joined by Mark Chaikin. He's the founder, as I mentioned, of Chaikin Analytics. Mark, how's it going on this Thursday morning?
It's going very well. We had a big breakout day yesterday after the midterms, and I'm hopeful that we've reversed and formed a bottom.
Well, that's what we were just kind of talking about is when you were on the show, 2-3 weeks ago, you were saying V bottom. Dennis was saying W. For a while, it looked like maybe Dennis, the W bottom, it looked like it was forming. But no, yesterday, we're through that 50% retracement now, and so are we coming back here all the way or what?
Well, we had two benchmarks to overcome. One was the 200-day declining moving average at about 27.65. We beat that yesterday, and then we had to break the pattern of lower highs and lower lows. And that required a close above 28.12 on the S&P 500. We did that yesterday. So my conclusion is, yeah, we've made the bottom, and the reason is the uncertainty of the midterms is out of the way. The historics, and by the way, seasonal patterns and historics have not been quite as reliable in the last year as they have been for 25 years. But it's well known that the stock market does extremely well in the 9 months after the midterm elections. And the reasons are pretty clear. The president in power does everything he can to get a good outcome in the presidential 2 years later. So I think we're well positioned for a rally, and what I like is that there was so much bearishness leading into the midterms that everybody was leaning the wrong way. Even people like Paul Tudor Jones are out there saying 2018 is okay, but 2019 terrible year for the market. And he's a smart guy. For him to go out on a limb like that strikes me as a bit odd.
But Mark, don't you think, okay, so the midterms are over, but in 2 weeks here, we're going to get this G20 summit, and all it takes is one bad meeting with China, and it's chaos again, right? So don't you think that, are we really out of the woods yet with a big event like that right around the corner?
Well, you can't make investment decisions based on what might happen, especially with a mercurial president in the White House. One tweet could send the market up 10%. If Trump tweeted that we've reached an agreement with China, what do you think would happen to Boeing? Boeing would make a new all-time high. Here's a stock, not just in commercial aviation, but in hypersonic, which is a big arms race right now. And in face of the headwinds of strong dollar, the stock is closer to its high than any of the big blue chips. I think you've got to invest and trade based on what you see in front of you. What you see in front of you is an earnings-driven bull market, rising interest rates because the economy is strong, low inflation, and a lot of bears out there. And so I'm going to go with what I know. Would a bad tweet or outcome out of the G20 hurt the market? Sure. But these are buying opportunities. What I think is in 3 months, we'll look back at October of 2018 and say this was a dream of a buying opportunity, but living through it has been a nightmare and may continue to be.
Great point, Mark. And you know what? I agree with just the viciousness of yesterday's rally was pretty incredible there. I mean, you look at a stock like Twilio, and it's gapping up, $7-8 on a great earnings report. But it wasn't the gap. It was the run after the original gap that really was vicious. I mean, that went up another 13 points on the gap and go. So, and straight up, like, I mean, if you were short that thing saying, okay, well, I'm going to get a pullback here eventually to cover, it never came. I mean, it opened at 82. In a heartbeat, it was 86. And then it just kept running for the next 2 hours to 96. I mean, that was just like, get me in no matter what. Like, they had to be buying it. And it wasn't just Twilio yesterday. Like we were arguing right before he came on. Like, some of the defensive stocks were actually trading high. The utility stocks were higher yesterday. Pfizer and Merck, which are typically more defensive, were higher. So we had a risk on day, but it wasn't just buying the high beta names. They were buying everything yesterday.
Everything. Yeah, and Centene up 9% because Medicaid, even in red states, is finished. Now, in the spirit of full disclosure, the power gauge was bearish on Twilio. And you had guys like John Najarian and Pete Najarian and Jim Cramer all bullish on the stock. So they were really flogging the blog posts after the earnings came out. And so it was pretty tough for the shorts there. On the other hand, Zillow with a bearish power gauge rating going into the earnings, bearish power gauge rating for, 4 months. We talked about it on the show.
Yeah.
Totally blew up their business model. They're buying real estate. Come on. WYNN.
Great call by you too, Mark. Just before we go, that was a fantastic call by you on Zillow, because this thing fell $10 yesterday, another 30%. And I remember you talking about it on the show. So I just want to say props to you for that call.
I appreciate that. So, you've got a lot of interesting dichotomies. There's been rolling corrections. Tech is now bifurcated because when I think of tech now, I think of cloud, so Salesforce, Adobe, also Visa. I think traditional tech semiconductors are still with big problems from a supply point of view and a demand point of view. What I like to look at there is Lam Research and AMAT, which are the equipment manufacturers, and Micron, which is a good poster child for commodity chips, DRAM chips. And I don't see any signs of a bottom there. This is bottom fishing to the max. So tech, I think, is has to be granular now. You can't just say tech is going up. It's what parts of tech. Cloud is huge. I mean, Tableau had a great report. So right now, cloud is hot. And so I think tech is going to lead, but not in that hardware side of tech. It's the software side of tech.
What about Square? We get a disappointing report from them last night, but we know this stock is one of the leaders. And I look at it down 5 points here this morning, and I'm thinking, maybe I should get down and dirty and buy some. I haven't done that yet, but I bet there's a lot of people maybe thinking like I am here too. What are your thoughts around Square?
Well, let's take a look at the power gauge. In that space, by the way, I like Visa. Visa bought 18 million shares of Square. So Visa is all into partnerships now. Now, the power gauge has been bearish. The power gauge turned bearish on October 1st. October 10th. And, it rallied into the earnings report. That's something that your listeners really ought to know about. Very often, stocks based on, I don't know what, short covering and or wishful thinking. Stocks with bearish ratings tend to rally into the earnings. It's a great opportunity to get out, put on a put spread. So I wouldn't be bottom fishing here in Square, not with a bearish power gauge rating. It did make the new high in September. That's one of my criteria for what I buy into a year-end rally. I want stocks that made new highs before this waterfall decline.
What else are you?
With the bearish power gauge rating, not good.
One of our traders wants you to talk oil here for a second there, Mark, because we've come back quite a ways. Well, actually, I guess we're not come back that far, but on the oil services stocks themselves, they've bounced back. Oil itself really hasn't. What are your thoughts on oil? Because it was an awful October for oil, straight down. November hasn't really gone any better for it. What are your thoughts here on oil?
Well, first, I have a little contrary view. That Schlumberger, which is the largest factor in oil services, is right at the bottom of the page. So there's been no comeback there. And there may have been some smaller companies that had a bounce. We've been bullish on the refiners, and we're throwing in the towel as of 2 days ago. The reason is the crack spread. The spread between West Texas crude, which is domestic, and Brent crude, which is foreign, has turned unfavorable. So whereas we had liked Marathon, Phillips, Holly Farms, and Valero, I just can't buck the technicals. The technicals are too weak, and with the price of crude down, that doesn't always hurt the refiners. I'm just out of the energy patch here.
Mark, question from a chat here on Paychex, or I'm sorry, on PYX, Pyxis, PYX.
We're going off the board because I don't know this one either.
It's a food stock. It's a recent issue. It's probably been spun out of something. Had a huge run from 20 to 50. That makes me nervous right there. Let's see.
Now it's down 23%. Did they have earnings here this morning, Spencer? I don't follow the stock at all.
Oh, no, this is tobacco leaf. This is cannabis.
Okay.
Yeah.
This is cannabis. Yeah, I don't have an opinion on cannabis. Okay. I mean, if you want to play it, go with Constellation Brands, I guess, or one of the best pure plays. But Sessions being forced out gave you a good rally in these stocks yesterday because he's
sold
anti-pot, and I don't have a feel there. I'll tell you a place where I think there's opportunity is the media stocks. So Comcast, Viacom, Disney, which reports tonight. I think I'd wait till after the earnings because analysts tend to go over their earnings with a fine-tooth comb, looking for trouble where it may not even be with ESPN and cord cutting and so forth. So I like Disney long-term, bullish rating. Comcast in an uptrend, doing everything right, but not really, a major problem on the horizon with Sky coming in. They're expanding. And Viacom is a turnaround. So I think that's a way to play the
What about
year-end rally.
What about Discovery, who had earnings this morning? They missed on the EPS and they missed on the sales.
I think Discovery had a bullish power gauge rating. Let's see. Yeah, it had a bullish rating, so we're on the wrong side of that. But let's see how the market reacts now. If it's down, typically these stocks undergo about 2 to 3 days of selling. This is something Jim Cramer has really observed, and I see that over and over again. Let's see what it's doing pre-market. Not down a lot pre-market, so it's down less than 1% pre-market, although not a lot of volume. So that's the stock that just doesn't trade pre-market. I'd look to see where it comes down. I'll tell you, it's quarters at 30, closed at 33.08. So somewhere between 30 and 30 and a half, depending on what the comments are from management, would be a spot to step in there.
Mark, any names you're looking for in the pharma space? Getting another question here from the chat.
Yeah, big time. Pfizer really doing well. It's in an uptrend, higher highs and higher lows. Bullish power gauge rating. Abbott looking really fine. ABT, if you're conservative, Johnson & Johnson. Yesterday, when I did my 1-hour webinar with Jim Cramer, he said, "What about Johnson & Johnson?" I said, "It's like having breakfast with your grandmother." So it's nice, it's comfortable, it's consistent earnings, and you've got medical devices in there. So there are 3 names in pharma that I think will do reasonably well. And I don't think these are going to be affected by any pricing. The discussions with the Democratic House. Merck, I think, had a big day yesterday.
Yeah, it was up big too.
And
what?
Yeah, that does not have a bullish rating. So I'd go with the 3 that I mentioned: Pfizer, Abbott, Johnson & Johnson.
Why is the divergence there between big pharma and biotech here now, you think, Mark? Because we've seen biotech kind of get wrecked here, and was maybe that just because a little more volatile, higher beta names, because you look at, and they've come back a little bit here in the last couple of weeks, like everything has, but Biogen got hit, the IBB really got hit hard, but big pharma held up. And big pharma has turned around, actually, like you said, on Merck. Merck's making a new multi-year high here yesterday. So why do you think your big pharma outperforming biotech?
I think 2 buzzwords. One, defensive. So drug stocks are typically defensive stocks along with utilities, and they serve that purpose. But you do have the growth aspect. Biotech, very volatile, and you hit on the reason biotech got hit. IBB. You've got a big trader and institutional participation in that ETF. So if they're liquidating IBB just because they're taking off volatility, the ETF is forced to sell everything it's got. It's got to sell Amgen, Biogen, Celgene, Gilead, Regeneron, everything. Whereas the drug ETFs were not under liquidation because they were being used as a defensive sort of holding pen during that washout decline. So that is the reason. And biotech's always been more volatile than big pharma. So my favorite there is Amgen. Amgen's got some really good new drugs. They've got a migraine drug that apparently does some wonderful things on a once-a-month treatment. Cramer was talking about that because he takes it. So I think the IBB is the cattle prod that moves the stocks. So in volatile times, when the market's under pressure and it's risk off, you're going to see the biotech stocks come under pressure.
All right, we've been on the line with Mark Chaikin from Chaikin Analytics. Joins us pretty much every other Thursday. Mark, thanks so much for the time as always, and have a good rest of the week.
You too, guys. Good trading, and let's see how they hold these gains from yesterday.
Let's hope they can. All right, Dennis.
Thanks, Mark.
Dennis, let's hop back into the earnings parade here.
Yeah,
we had a lot. We only really got to 1 or 2. Let's look at Roku. This is one that is very prone to big earnings gaps. Today is no different. Unfortunately, it is to the downside here. Let me pull up a 15-minute chart so we can get the pre-market action. Roku Q3 EPS 9-cent loss. That beat by 3 cents. Sales 173 versus $169 million. So beats on the Q3 numbers. The fiscal year sales came in line to higher, $722 to $732 million is the range that they gave. That was higher, or in line with the $722 million estimates. Q3 active accounts up 43% year over year. Total streaming hours up 63% year over year. And the Q4 sales guidance was in line. All in all, that sounds like a good report, but this is a high flyer.
Not good enough is the whole problem. And it did, like Mark said, it did kind of run up into the report here too. You had a big pop yesterday along with everything. Significantly off the lows we set back there. Well, we're going to test those lows here today. Let's see how it responds at those lows there. We had the triple bottom in October, 49.32, looking at the daily chart, 49.31, and the next day, 49.28. Those three lows on a widely volatile, like a crazy volatile stock. You have three lows within 4 cents of each other. So that is such a huge level, 49.30. I didn't see where it traded down to after hours here last night, but I would imagine that's the line that it needs to hold. If it does take that out, the thing could be at 44 bucks. But if it's going to bounce anywhere, I think it's going to be around the 49.32. You can call it 50 if you want to for rounding purposes, but the support is very well defined.
Traded down to 50 flat.
Yeah, so the support's very well defined, 49.32, 49.28. So you can get a little bit below 50. You start taking out that 49 area, though, I think it'd be a 45 in a heartbeat. So you just got to be careful. These higher beta names are wild, and you do get gaps and goes on. They don't always on the upside. Sometimes they're on the downside. So if I was trying it, I might try for a bounce. That's a level I would try from. But I don't want to see it take out that support.
This one is a huge gapper. Gapped up huge last November on earnings. Gapped down huge in February.
It goes.
Gapped up huge in August. Down huge today. This is a wild child. I
trade Roku often, just doing when I'm trading it with the Qs, and I know the beta. And just putting in perspective how wild the stock is just on a normal day. Usually it moves 3 times what the Qs are moving. So if the Qs are up 1%, it's going to be up usually 3. Now, obviously, it's nothing to do on an earnings day that you can't even look at the Qs. It doesn't matter. It's all about its own fundamental news. But just saying how wild this stock is. Like if I was, I basically take a third position on this thing, knowing that it's going to move that much on a normal day. On this type of day, it's going to be wild. So anyways, just be cautious if you're trading it. Yes, it could bounce back here, but it doesn't have to do anything.
All right, another wild one this morning here is WYNN. We talked about this one on the pre-market show. And, this is one of those examples that we discussed earlier about maybe just looking for a reason why. So I'll give you the numbers here. Q3 adjusted EPS $1.68 that missed by a penny, and sales beat 1.71 versus $1.66 billion. So the Q3 numbers were not bad. But we talked about sometimes you just look for a reason why. The analyst, the media, someone looking for a reason, and they're
it was Macau.
Yes, they're keying in on the comments that on the conference call that Macau revenue would be weaker or a slowdown is the exact word he used on the conference call in their Macau business.
Yeah, and if you actually were trading it last night, it got up to like 121, 122 on the initial report. It had the huge spike, but look where it failed was all those old highs in October. And stocks that are in downtrend, Spinner and I talk about this in the chat all the time. We talk about it on the show. Stocks that are in downtrends, you're usually selling rips. The trend was still ugly here on WYNN. Yes, it looked like it was going to try to buck out of it. Yes, it looked like an okay report off the hop, but it got sold even before the conference call. It was actually already trading in the red. So there's just so much, overhead supply, people who have been punished in this thing that are willing sellers on any pop. And that's why stocks in downtrends, when they pop back up, they always get met. It seems like they, nothing's forever, but they often get met with new sellers or old sellers for that, and people trying to get their money back. So you had an opportunity last night if you were long WYNN on the 119, 120. Some smart money managers used that opportunity to sell, and they quickly rewarded there, because then on the conference call, the stock's trading around 110, and when those comments came out from the conference call, it immediately fell under $100. So like boom, whoosh. And it's not only WYNN, so this is just a disaster, and it absolutely needs to hold those lows of $92. I don't know if we're going to get there today, but we might be in the cards to retest those lows. Maybe you take a shot there, but a 90.70 could even be early. Just so ugly, these casino stocks. Las Vegas Sands destroyed in sympathy here today. It's down 6%. MGM, which is your other big gun, is down 3.5%, a little less Macau exposure. The beta is usually less on MGM. But, Caesars, which is in talks, it's trading down 3% here as well. And you can even go into some of the other plays like some of your other defense or some of your other casino stocks too, or Boyd Gaming stocks like that are probably going to be down here today too. Anything to do with gaming is going to be down here today, I would imagine, on this WYNN numbers.
Just such a bad report that it's going to bring down everybody. But
Everything
but we do see
yeah.
this.
Like Boyd is a stock that's rallied here the last few days. Well, actually, it's consolidated the last few days, but had a little pop off the lows. But I mean, this thing hasn't traded at all. Didn't trade after hours last night, but it's another one that probably gets hit. So when this is going to be the example, the exact opposite of a rising tide lifts all ships, while a sinking boat, I don't know what you say for a sinking tide, but it lowers all ships, a lowering tide. And this WYNN Resorts here is awful for the sector.
All right, let's go to Qualcomm here. They reported after the close yesterday. QCOM reporting a Q4 EPS of 90 cents versus an 82-cent estimate. Sales 5.8 versus 5.53 billion dollars. So beats on both the top and bottom line for the Q4. The Q1 EPS guidance coming in higher than estimates. $1.05 to $1.15 is the range they gave. 95 cents was the estimate. They did lower their Q1 sales guidance, however, driven by the absence of their Apple chip purchase in the quarter. But stock getting hit this morning. That's a good report. They beat on the EPS. They beat on sales. Their guidance for Q1 EPS was good, but
out of favor now.
Yeah.
Stock is back out of favor. And, I've done a lot of things wrong in my investment portfolio over time. I do some things right as well. This is something I did right. I sold my Qualcomm back in September. I think I talked about it on the show. It had just gone up too much too fast, had that ridiculous gap. I don't even remember what it was from, but I think I sold this, I'm pretty sure in the 75 handle. 75, I'm pretty sure right around $75 I sold this out of my invest portfolio, which was almost the top. And it got up to 76.50. And I have to go check and actually see the price that I got. It might have even been in the 76 handle, but I think I sold $75 out of my, and I'm out of Qualcomm here now. It's back here at 57. If it ever gets back to 50, I will probably rebuy those shares. We've seen, a lot of chips. We've seen a lot of tech stocks come back down significantly. If you look at the long-term chart on Qualcomm, every time it gets back up into the 70s, it always seems to find sellers. And every time it gets down in the lower 50s, it seems to find buyers. So long-term channel here has buyers down in the lower 50s. You're buying at 57, yes, you might bounce. I think you could be early. I think eventually could get back to 50. That's what I'm going for. So hoping it gets back down to the lower 50s so I can take another swing at it on the long side.
All right, let's go to Take-Two Interactive. TTWO reported here. Give you those numbers. The where am I? Am I pro? Q3 GAAP EPS. I'm sorry, Q2 GAAP EPS of 22 cents. That's not comparable to the 93-cent estimate. That's an adjusted number. Sales 492 versus $549 million. So a miss on the sales figure. Q3 EPS guidance coming in at 31 to 41 cents. Sales guidance at around $1.1 billion. Those are both a little bit lower or in line with estimates, I guess. Take-Two's is yesterday. ATVI is after the bell today. So we'll do Take-Two first. Dennis, thoughts?
You know what? Amazingly, this stock has held up so much better than the other two. I mean, I bought some EA Sports, my long-term invest portfolio back here, just after the earnings around $91. I'm up slightly in it here. Activision Blizzard, ATVI is significantly off its highs too. Then you got Take-Two within striking distance, 132. You're within 7 points of the all-time high here. So amazingly, this one obviously is best of breed. The chart is telling you that. And I still believe in the esports story. And if you want to own best of breed, I think you're buying pullbacks on Take-Two.
Then with ATVI after the close today, I'll pull
that's going to matter
chart
too,
here.
just obviously in the sector as well. But there's been a separation here. Take two obviously has been where the money is still going. The ATVI and the EA sports charts both look broken. I mean, this EA I put in the long-term retirement account. It was 150. I just think it's gotten too cheap here at $92. I know the PE is still a little bit high, but I still believe there's going to be some growth. And like I said, I still believe in the story. So there's the big three playing. So that was just, I just think it's come down too far here now, and I think long term I'll be happy with that purchase. ATVI chart doesn't look quite as good. I mean, if you get a vicious sell off here after earnings, 60 has been support there back in 2017, so maybe it bounces there. But it's a coin flip. These earnings events are all coin flips. I rarely take a stock through earnings, and for that reason, because these events are hard to predict.
This ATVI is so interesting to me. So this is one of those examples of Main Street and Wall Street at odds with each other, because over the weekend, ATVI or Blizzard, which is half of ATVI, they presented a new game, Diablo Immortal. It's a mobile game, and Wall Street loves it, and the fans hated it. They got a ton of backlash over the weekend because it's a mobile game. It's not a console game, and that's what the fans wanted. And they were trashing Blizzard all weekend. They got a ton of negative press on this. The analysts like it because, of course, mobile is the future. But this is interesting to me. So I'm going to be watching this one all day. You had that down day, that big red candle a couple days ago. So this will be one that's on my radar today, just because Wall Street and Main Street are just totally at odds with each other right now on this story. So it'll be fun to see who wins that battle. 8:43 here, Dennis. We had L Brands, not earnings, but they had a guidance raise here this morning, raising their Q3 adjusted EPS guidance from a 0 cent to 5 cent gain range to 15 cent Q3 EPS guidance is what they're raising it to. So a notable guidance raise here for L Brands.
Incredible run, and we're talking a 2-week run, October 23rd, which is my this 28.86 is where we were. Today we're 36.90, so you're talking about a tidy little 9-point or 8.5-point rally here on a $26 stock. So I don't know what the math is on that, but it sounds like 30% in 2 weeks. Been an incredible run here for L Brands in a gap area. The gap, if you look back on the charts that I'm talking about, is from July 11th, and the stock gap down from 36.77 all the way down to 32, 34, the high of that day, 34.35. So you're trying to fill that gap here this morning. I think it does. Now, again, here, if you're coming in here now, you're late to the party and you're buying somebody else's profits. So I'd just be cautious here buying it now. You have multiple highs in that 30 back in April, May, June of 2018, just this year. You had multiple highs around 38. So that might be where it stalls out, but can't argue with this recent trend. Trend is your friend. The trend's still up.
Let's talk about pod stocks, Dennis, because we didn't really get there yet. And they had the huge day yesterday, CGC. Every pod stock was up yesterday with the sessions thing.
Right.
And now we're giving it back here a little bit this morning. There was a Cowen note that you saw that we both kind of saw. We didn't see the note. We just saw it tweeted.
Yeah, those headlines people talk about. Cowen came out this morning here.
I can read it for you.
Go ahead.
They do not expect a change in cannabis policy following Sessions' resignation. They see a risk that Trump will nominate a new AG who is anti-cannabis. They didn't give a timeline for that, but that's what they believe to be the case there. So, not yesterday's development, not a headwind for cannabis, is what they're saying.
Yeah. So, and that's why you see pot stocks maybe potentially weaker here in the overall market today. I mean, Tilray's down almost $6. You've got the stocks across the sector down between 1% and 4% here. So, yes, the market is weak. Yes, they're giving back some of yesterday's gains, but I think some people are reading this Cowen note and saying, maybe I should take some profits. And it's been an impressive run. I mean, these stocks have run up here too. If you look, CGC was $31 a week and a half ago, $46 yesterday. So 15 points on 30. You're talking about stock went up 40% here in a week and a half. So they've had a big move. Again, if you're buying them now, you're buying somebody else's profits. Maybe, they can continue to go higher. And the trend, yes, is still your friend here, at least the immediate trend, but there's overall still a lot of overhead supply you're running into too. So I think if I was long some of these pod stocks, I'd be more inclined to sell the rips and buy the dips.
This one I'm so mad because I have been interested in MJ the ETF there, and I missed the boat. I missed my shot. I feel
I did too. I missed the ACB by like 20 cents. I told him, I had the order out there trying to basically call the bottom here, and I'm very close to doing it, but I didn't quite get it. And I just missed the bottom on ACB because I thought it had just gotten too cheap. I mean, it went from $13 down to under $6. And on the Canadian charts, the Canadian chart always looks a little bit different than the American chart because of currency effects. And there was like a double bottom I was looking at there. I was like, I think it's going to get down there near that 7 Canadian area. So I threw it up a little bit higher at 7.11. I think I put my order, and it got down like 7.27 or something. So I missed by like 15 cents. And now, you're talking 7.82 on a U.S. basis. That's another 30% higher in Canada. Canada's 10.20. So I missed almost a 50% pop in it by just trying to save myself a nickel.
Yeah.
So obviously, when you really want the stock, just pay up.
All right, at 8:47, Dennis. Any notable imbalances so far today?
Yeah, there was a lot actually.
A lot, really.
So when we came out at 8:30, we had the data too, which we didn't mention. We had some jobless claims come out there, and that actually did sell us off a little bit here in the overall market. But if I'm looking at imbalances, they are to the south side here today. So definitely some profit taking even on the opening here. Twilio, the incredible run there yesterday. 85,000 to sell here this morning on the open. So there's somebody willing to take some profits. I'm not sure I'm coming in here getting bearish that stock here though, because such an incredible run. I think you got people who are looking to buy the pullback now. And if anybody is short, they're looking to cover. So I think you have underneath demand here in Twilio now. Exact opposite problem of all these other stocks with overhead supply. Square reported earnings, obviously on the disappointment, 157,000 to sell. That stands out. General Electric did not participate in the rally at all yesterday. Actually was down. I mean, everything we said, it was an everything rally yesterday. GE was the one stock that I noticed that was red again. The stock just gets no love. I don't see what's going to change that. Anchovy still has the $5 price target on it. It looks like it's going to take out the lows to me here. 267,000 to sell in GE. So our morning seller, which has been in there for about a year in GE. And this is why, if you listen to PreMarket Prep, we give you different information. We have been talking about the institutional seller in GE probably for the last year on the open. There's just been institutions selling the open every single day for a year. That's got to be the most incredible, pattern I've ever seen. And the odd day you see a buy and balance in there, but it seems like 9 out of 10 days there's a seller at GE on the open, and it looks like they're back here again, and this with good cause. I mean, they've been correct. So Inch's $5 price target, might seem pretty crazy, but you know what? It's possible. And we take out these lows here of 9, be at 850 in a heartbeat.
Anything else?
Other bounces, Coke 164,000 to sell. That's about it.
Okay. We have about 10 minutes left in the show, and we're gonna hit on some stocks that we're going ex-dividend. So let's talk about that because we haven't discussed dividends really in a while on the show. But we have a list here of stocks that you mentioned: IBM, Wells Fargo, Apple, Boeing, Pfizer. We've talked a couple already on the show, but let's talk about just the ex-dividend trading in general.
Yeah, so typically what happens is stocks run up into their ex-dividend date and are week after. But this is only for those names like, AT&T and Verizon, they're big dividend plays.
Yeah.
There's a few of these yesterday that did have dividends, so you just want to be aware that there's adjusted closes here too. So we had Boeing paid a $1.71 dividend. The closing price on Boeing was $272.02. The adjusted close is $270.31. So, that's the adjusted close for the dividend. You had IBM, which had an incredible run for a few days there. And obviously, from 116 to 125, it paid a $1.57 dividend here overnight. So the adjusted close on IBM is 123.27. So just be aware, it did have a 3-day run up. Yes, it was because of the execs, but also it's following their dividend pattern there too, running up ahead of the dividend date, and it did. And IBM is a pure dividend player now with the 5% dividend. So just be cautious. Sometimes these things can be weak afterwards. Wells Fargo, 43-cent dividend paid yesterday. Adjusted close is now 53.15. BP, which is an oil play, its ex-dividend here today. Adjusted close on BP is 42.49. Walgreens, WBA, Costco all paid dividends yesterday. Apple also went ex-dividend yesterday as well. So Apple's closed 209.95. The adjusted close on Apple 209.22. Morgan Stanley bullish note, which is why Apple's not trading down here in the pre-market. They raised their price target, and I think they were citing services revenue growth.
That reminds me, I haven't looked at my ratings calendar here for about an hour or so, just going through the notable ratings. Not a ton in terms of upgrades. Actually, not a ton in general this morning. Nothing really, aside from the Apple thing. A lot of them are just earnings follow-throughs from the analyst.
I saw Axon, which is interesting. Your old Taser stock, AAXN, catching an upgraded JP Morgan. Yep. That one is trading at $2.70. It got killed yesterday. So JP Morgan coming out defending it here today. I don't know. This must just be a valuation call.
Okay, here's one. Gordon Haskett downgrading RH, Restoration Hardware, and Nordstrom. RH
and Lowe's.
Oh, Lowe's yeah. Too. Look at that. RH downgraded to hold. Nordstrom downgraded to reduce, so I guess their version of a sell, and Lowe's downgraded to hold. Good call on that. So three downgrades.
So Gordon Haskett got some bears going this morning. Is that who is it? Not Inch, is it?
No, I don't believe so.
Anyway, so we got Lowe's trading down about $1 here in the pre-market, 99.70. It's offered there though, so it's probably going lower than that, I would imagine. Restoration Hardware trading down 4 points on the downgrade. And what was the other one?
Nordstrom.
Nordstrom's getting the beats here. It's down 4% in the pre-market. Although it's 63.85, you can strike that. It's 64.01 bid. Best offers up 65.50. I'd imagine this is probably going to open in the 64s or 65. So I don't think you're going to see it in the 63s, at least at the open. That would be a pretty big hit. Although that was to sell Nordstrom, the downgrade.
Yes.
Yeah, so maybe lower 64s. Well, probably fair value on that. So you do have those. And then you also had a note from KeyBank on Weight Watchers. Just interesting because Weight Watchers got beats yesterday. And I kind of laughed at this one. They said it lost too much weight yesterday.
Oh, get out of here with that.
KeyBank. So they're defending it, saying basically it's on sale.
The analyst note headline puns are like the worst puns ever.
I laughed out loud, I think, when I read the lost too much weight yesterday. But stock, or since the earnings, I guess it wasn't yesterday, since the earnings beat, but it's come back. If you look at Weight Watchers, come back a little bit. It's trading down with the overall market here today, but KeyBank defending it.
Come back, what, like $3?
Yeah, it's come back a little. Well, it's from the lows. It got down to $47.53, 6-point comeback here. It's not bad in 3 days. It's kind of trying to come back a little bit here. So just keep in mind, KeyBank is bullish here this morning. So it's trading down here this morning, but it's not an upgrade. But sometimes when they're just, get a bullish note going, sometimes, that can, spark a little bit of interest in the stock as well.
All right. That was everything on our list. Now I'm getting some heat from not taking questions from the chat. So let's do that for the rest of the show here. I got some tickers that people have been throwing out throughout the morning in both chats here. So let's start in no particular order here. Let's just start with Match MTCH. They had, of course, the earnings. We talked about this yesterday. Huge miss, big down day. What does yesterday's action do for you?
I've been bearish this, so I obviously had some egg on my face here. So when we talked about this after the earnings, I believe it was back in August, 46 or 47 bucks, and I was like, I think I'm fading it because I still think there's going to be competition coming. Stock ran to 60 after that. So, it's back now lower than I was originally bearish at, but obviously I wouldn't have held through all that there. So, but I was bearish at 45 before. I probably was still bearish at 60. I'm still think I'm bearish. So I think I'm a fader of Pop still in Match, even though I've been wrong for the last couple of months, although because of yesterday's report, now I'm looking like I'm more right. But anyways, I just think competition's going to come for them here. We know Facebook's working on a product as well. It's higher beta name.
Yeah, but that was from like a year ago.
Supply. I'm not my own opinion. You can have whatever opinion you want, but I'm not a believer in the story here.
All right. Have you looked at a chart of VLO recently, Valero?
Owned this one in my investment portfolio for a long time. Sold it too soon. It got hit. Mark was talking about it on the show just earlier there. Got a little triple bottom going $90. So let's see if it can hold that. Mark was throwing in the towel on these things. Yes, the trends are ugly, but if you get back up about 95, it could get interesting again. But you've got issues with oil, you've got issues with oil stocks, and you've got issues with the refiners as well. So stocks are all massively out of favor right now.
All right, question about Walmart. I saw a headline today that they're holding a Thanksgiving in order to get people into the stores earlier and earlier and earlier on Thanksgiving. They're holding a turkey, or they're having turkey carving parties in Walmart stores because they want you in the store buying stuff as quick as possible. I think that's a horrible idea, but what do I know? Anyway, Walmart.
Straight up. I mean, and obviously we had Jeremy Newsom on the show yesterday, and he's been right about this all along, bullish Walmart, and looks like he's not going to have to buy that person their free groceries all the way back. I mean, why not? It's come all the way back from the doldrums here in the summer when the thing was in the lower 80s. You're only $4 off the all-time high here. Why not get up there and get to it? 109.98. So I think eventually it's going to get to it too. Trend is your friend. We'll buy our pullbacks in Walmart.
Bristol Meyer BMY.
Well, you're showing life again. Yes, we took out the major support, and I was talking about this at 50. We took it out. We were down below it for a few days. We got when they were selling everything back in October, got down to 46.94. Now it's starting to show some life, and you do have Big Pharma that is kicking some major butt. It is Big Pharma. It does have support down here in the 50s. You know what? I think I'm going to buy or pullbacks in BMY too. Well, buy or pullbacks in a lot of stocks here today.
Yeah.
But anyway,
just
noticing as we go through these charts, and this is always good and a good exercise for me. A lot of people ask me, why, I trade actively, and I have traders in the firm saying, why do the show? Why am I on here? Well, it kind of gets my own thought process going too. And, with great people in the chat give me different ideas, so it helps my own trading as well. I'm not really in it for the money here, for doing the show. I'm in it just because it gets my own brain working. It's like, why do I do, and I do a lot of educational stuff I used to do with Bright Trading. And, why do I do that? Or, speak, and I've spoken at Notre Dame, spoken at different schools. It's because when you're speaking about something out loud, sometimes it really helps you to focus your thoughts. And I find, like, by me doing the pre-market show in the morning for the hour, that I can really start to focus on, and get my train of thoughts going. And it's not only that, it's the idea generation we get from our great traders in our chat room as well. So, I get something, I was like, I haven't looked at that chart. I bring it up, I look at it, I was like, it looks pretty good. And I write it down on my nice little fun sheet of paper as a trading idea.
Yeah.
So that's really, why, we started, and, we started doing this show like 4 or 5 years ago, because we enjoy talking the markets too. And I joke, it helps to save my marriage as well, because if I wasn't talking to you guys about stocks, I'd be talking to my wife about stocks, and it's going to drive her nuts talking all day to her about stocks. So I get my whole talking about stocks out. But I mean, it really helps to focus my thoughts. So anyways, wild tangent on that one. But this Bristol Myers I hadn't looked at for a while. And I look at this and I think how strong Big Pharma's been. I'd love to buy this in the lower 50s.
Yeah, it forces you to think about stuff that you wouldn't have normally.
It does, and it gets, and it's different ideas. I mean, we have so many great traders in the chat, that give great ideas all the time. And I'm not necessarily going to always agree, and traders don't always agree. I mean, most of the time they don't agree. But we come up with different ideas, and maybe I see something in the charts that maybe somebody else didn't see, or something I like. So, anyways, that's just my thought process there, and the show really helps to focus. All of my thoughts, and it gives me different ideas as well from our chats.
All right, 8:59 now. That's gonna do it for our show today. So thanks everyone who joined us. Thanks to those of you in our chat rooms on YouTube and premarket.benzinga.com. That chat goes throughout the entire day, so check that one out after we're done here. People are in there all day exchanging ideas and talking the markets. Thanks to our guest, Mark Chaikin, for joining us today. If you missed any part of our show, catch our podcast. We're on iTunes, SoundCloud, Stitcher, TuneIn, and Google Play. And please remember that all the information from our show is for informational purposes and not meant to be investing advice. On that note, that's it for us today. So we'll be back on tomorrow's show. We'll be joined by Mike Olson, analyst of Piper Jaffray, to break down the earnings reports from his coverage. That includes Apple, ATVI, Netflix, Take-Two, eBay, TripAdvisor, who was today. So Mike Olson will break all that down on tomorrow's show. But in the meantime, hope you folks have a good day, and we'll see you again on Friday.